For the past 50 years, we've lived under the unchallenged rule of one king, the US dollar. It's the ultimate global foundation. Every major trader, every oil exporter, every stock market, they all bow down to its authority. But what if I told you the world's attention is no longer focused on Washington, or even Beijing? It's pointed at the most unlikely place imaginable, Tokyo. Over there, an economic giant that's been asleep for decades, stuck on zero interest rates, is finally stirring. And the signals it's sending out are frankly terrifying to Wall Street. Japan, the previously passive giant, has just pulled the trigger on a huge financial surprise. Analysts are now scrambling because this bullet from Tokyo could deliver a devastating blow, shattering 50 years of records, shaking the global bond markets, and potentially destroying the US dollar's dominance. Stick around to find out exactly what the Bank of Japan is doing and why one tiny rate hike could be the beginning of the end for the dollar era. Before we dive into this financial drama, if you want to stay ahead of the curve on global events that actually affect your wallet, do me a favor. Hit that like button, subscribe to the channel, and turn on notifications. You don't want to miss what comes next. Let's get into the chaos. To understand why this is such a huge deal, we need to quickly rewind. For years, the Japanese yen was on a continuous slide. It was super weak, crushed by super loose monetary policy, the infamous Abenomics. Things got even worse when PM Saida Kaiichi won the election. He was a known believer in Shinzo Abe's old playbook: low rates, massive stimulus, and a strong export model. The market panicked naturally. The yen crashed, hitting levels we haven't seen in ages, almost touching 157 yen per dollar. Just to put that in perspective, the historical normal is around 110 yen per dollar. That's a massive gap. But here's the shocker. Amidst all the political noise, Takeichi's own economic advisor let slip that the government might tolerate an interest rate hike. Just one, maybe 25 basis points, sometime in the near future. At first, it sounded like a distant dream. But check out how fast the market calendar changed. Within a couple of weeks, traders started betting heavily that this rate hike was actually coming at the Bank of Japan's December meeting. The momentum flipped instantly. This supposedly dying currency suddenly came back to life, surging hard and gaining over 2% in less than 2 days. Back in Tokyo, the warning bells were ringing loudly. So why on earth would Japan risk everything for one tiny rate hike? Japan is caught in a unique double-edged trap. On one side, a weak yen is great for their exporters, cars, electronics, tech. That's the engine of their economy. But on the flip side, it's a living nightmare. Japan imports almost all its oil, and every barrel is priced in US dollars. If the yen is weak, importing oil, energy, and commodities becomes prohibitively expensive. After fighting deflation for decades, Japan finally hit sustained inflation above 2%. Now, it's running around 3%. Prices are skyrocketing domestically, and Japanese households are feeling the squeeze. The Bank of Japan, under Governor Kazu Oda, felt they had no choice but to stabilize prices by raising rates. Oda has basically signaled they are weighing the pros and cons of moving the rate from 0.5% to 0.75%. The market took one look and said, a rate hike is coming. But this is where it gets bizarre. Right in the middle of the BOJ's talk about tightening the screws, PM Takaichi launched a massive $135 billion stimulus package. We're talking cash handouts, energy subsidies, and payments for children, one of the largest spending sprees since the pandemic. Combining fiscal stimulus, pumping money in, with monetary tightening, pulling money out is an absolutely weird and questionable mix. It's a desperate attempt to contain inflation without crushing already stressed households. But the market is confused. Is this a sign of confidence or sheer panic? Part 3. The dollar's 50-year record crash, 4:45 to 6:15. Music. Increasing intensity. Global focus. Narrator. Now, let's put this whole thing into a global context. And this is where we return to our main point, the dollar's collapse. The yen's sudden strength, believe it or not, isn't mostly about Japan at all. It's a direct reflection of the dollar getting absolutely hammered. The US dollar index just recorded a terrifying historic low, 11 straight days of losses. That's the longest losing streak since guess the year? 1971. If you know your history, 1971 is the famous year President Nixon ended the gold standard, a moment that fundamentally reset the global monetary system. That's how rare and significant this moment is. Why is the dollar weakening? Simple. With the Federal Reserve also expected to cut rates sometime in the future, global capital is shifting. Smart money is looking for safer harbors, for currencies and markets that offer a better return. And surprisingly, despite its domestic turmoil, Japan is now seen as a more stable investment destination. The world is dumping the US dollar. They are selling off US assets and piling into a currency that looks like it's about to raise rates, even if it's just a little bit. Japan, accidentally, has become the reluctant symbol of the anti-dollar revolution. This is why the Bank of Japan's December meeting is the most dangerous bet on the global market right now. This rate hike isn't just about inflation control. It's about credibility. Risk 1. If the BOJ raises rates too fast, they could send Japan crashing back into a deep recession or stagnation. Remember, Japan's debt-to-GDP ratio is immense. Higher borrowing costs could be catastrophic. Risk 2. If the BOJ waits too long, the yen could completely collapse again. That would send energy and commodity prices soaring higher, triggering out-of-control inflation and a massive loss of faith in the central bank. It's an incredibly delicate balancing act, and the Bank of Japan is walking a tightrope without a safety net. They aren't just determining the future of the yen. They are determining Japan's entire economic trajectory. And because of Japan's sheer size and role in global markets, the decision made in Tokyo in the coming days is going to rock global bonds, stock markets, and every single currency market worldwide. Japan has pulled the trigger. Now we just have to wait and see what bullet they fire, and how deep the wound it leaves on the US dollar's throne. So, what's your take? Is this really the beginning of the end for the global dollar dominance? Let me know your predictions in the comments below. I hope this breakdown helped you make sense of the craziness happening right now in the global economy. Don't forget to like, subscribe, and share this video so more people understand the shockwave coming from Tokyo. See you in the next video. Thanks for watching.